Want to grow your money in 2025? Stick around because I'm about to share 3 stock investment strategies that could help you maximize your profits in the new year. Whether you're a seasoned investor or just starting, these strategies are simple, powerful, and designed for success in 2025. Let's dive in. Hey everyone, welcome back to the channel. If you're looking to crush your financial goals in 2025, you're in the right place. In this video, I'll be sharing 3 stock investment strategies that are not only easy to understand, but can also help you build a solid investment portfolio this year. Whether you're a beginner or a seasoned pro, these strategies are going to take your investing game to the next level. So, let's get started. First up, we have dollar cost averaging, or DCA. This strategy is one of the simplest yet most effective ways to invest in the stock market. Instead of trying to time the market, you invest a fixed amount of money, regular intervals, let's say $500 every month, no matter what the market is doing. Why is this effective? It helps you avoid the stress of market fluctuations, and over time, you end up buying more shares when prices are lower and fewer shares when prices are higher. It's a great way to build wealth consistently without worrying about short-term market volatility. Plus, you're investing for the long term, which is always a good strategy. Next, let's talk about growth investing. This strategy focuses on investing in companies that are growing rapidly. Think Tesla, Amazon, or Nvidia. These companies may not always be the cheapest stocks to buy, but they have the potential for huge gains over time due to their innovative products and market dominance. The key here is identifying companies with strong growth potential, those disrupting industries, expanding into new markets, or leading the charge in tech. While growth stocks can be more volatile, they offer the opportunity for higher returns if you choose the right companies. So, do your research, stay patient, and let these stocks work for you. If you're more of a bargain hunter, value investing could be the strategy for you. This approach is all about finding stocks that are undervalued compared to their intrinsic worth. The goal is to buy low and sell high. For example, companies with solid fundamentals but temporarily depressed stock prices might be perfect for value investing. Look for stocks that are trading below their intrinsic value because the market has temporarily overlooked them. Over time, as the market corrects, the stock price should rise. This strategy requires patience, but the rewards can be significant if you pick the right companies.